That's a great topic for an educational video. Focusing on a first-person perspective, here is a detailed, straight-to-the-point script structured to provide maximum value with minimal fluff. Moneybag Acorns Later, best method for retirement script. Are you leveraging every single dollar you invest into Acorns to build the biggest possible retirement nest egg, or is your money just sitting there? That's a question I had to ask myself a few years ago when I started using Acorns. It's a fantastic, low-barrier-to-entry investing app, but if you're serious about retirement, you need to use the dedicated feature, Acorns Later. Now, Acorns Later is essentially an individual retirement arrangement, or IRA. This isn't just a standard investment account, it's a tax-advantaged account specifically designed for retirement. My experience has taught me that simply throwing your spare change into the main Acorns Invest account is a passive strategy. But leveraging Acorns Later is the active and best method for long-term retirement planning within the app. 1. Direct hit. The best method, understanding your IRA options. When you open Acorns Later, you are prompted to choose an IRA type. This is the first critical decision, and the best option depends on your current financial situation. Traditional IRA, this is what I went with initially. Contributions are made with pre-tax dollars. This means the money you put in reduces your taxable income today, giving you an immediate tax break. However, you pay income tax on the withdrawals in retirement. This is generally the best method if you expect to be in a lower tax bracket when you retire than you are right now. Roth IRA, contributions are made with money you've already paid taxes on, after-tax dollars. You get no immediate tax break. But here's the massive advantage, all the growth and qualified withdrawals in retirement are completely tax-free. This is the best method if you expect to be in a higher tax bracket when you retire. SEP IRA, this is for self-employed individuals and small business owners. If you fit this category, the SEP IRA offers significantly higher contribution limits, making it the best path for higher-earning entrepreneurs. For the vast majority, deciding between traditional, tax break now, and Roth, tax-free retirement, is the key. 2. Chart increasing. The best strategy, maximizing contributions. The second step, and arguably the most crucial for successful retirement, is maximizing your contribution strategy beyond just the round UPS. The power of recurring, round UPS are great, but they're inherently small. The best method I've found was setting up a significant recurring daily or weekly transfer. Even $5 a day adds up to over $1,800 a year, and that money goes straight into a tax-advantaged account. Annual limit priority. You should always try to hit the IRS annual contribution limit for your IRA type. In 2024, that limit is $7,000 if you're under 50. Prioritize funding your Acorns Later account first before putting extra into the standard invest account. Why? Because the tax-advantaged space is precious and you can't go back and fund previous years. Found Money. Actively look for Acorns Found Money partners. These are investments from partner brands directly into your account. Since these go into your IRA, they are essentially free, tax-advantaged contributions to your retirement. 3. Gear. The best portfolio, aggressive for time. For an Acorns Later account, your time horizon is decades, until you reach 59 and a half. This long runway dictates an aggressive portfolio choice. Default to aggressive. Acorns defaults you into a moderate portfolio, but if you're young, the best method is to switch to the aggressive portfolio. This invests heavily in stock-based exchange-traded funds, ETFs, and minimizes exposure to lower growth bonds. The rationale: you have decades to ride out market volatility. An aggressive portfolio will experience bigger dips, but historically, it offers the greatest overall growth potential, which is what you need to harness compounding for the next 30 to 40 years. You can always dial this back to conservative as you get closer to retirement, a process known as de-risking. By choosing the right IRA, prioritizing your contribution limits, and selecting an appropriately aggressive portfolio, you transform Acorns from a simple spare change saver into a powerful, tax-efficient retirement engine. With that said, thanks for watching, and until next time.